Welcome back. Let's focus on the big event next week, which is the union budget. What are the changes expected with respect to the taxation? Will there be any income tax relief at all? Any capital gains tax on the changes on the cards? Himanshu Parekh, the partner tax at KPMG India, joins us now. In a bit, we'll have Samir Kanabar join us as well. Himanshu, good morning and thanks for joining in. You know, this time there is a little more fiscal headroom, right? Because of the kind of tax collections that the government has got, the kind of RBI dividend that was given out as well. So on the taxation front, is there any relief that the middle class can expect? Overall, what are your expectations?
I think, yes, there is enough and more justification for the middle class to expect some relief from this budget. Now, if you see the tax regime as is applicable to individuals, we have two regimes which are currently under play. One is the what we call as the old regime, which comes into play where taxpayers are entitled to several tax incentives, but with a slightly higher rate of tax. Compare that with the new regime, where hardly any tax incentives are available to taxpayers, but they have a concessional rate of tax across, more liberalized slab rates as far as income streams are concerned. Now, if you look at the new regime, the basic exemption limit for individuals is pegged at 3 lakh rupees. And I think it's time for the government to relook at it and increase that from 3 lakh to at least 4 lakh rupees. Similarly, if you look at the standard deduction that is available to taxpayers, that's a mere amount of 50,000 rupees per annum. And there's a high expectation from taxpayers that that standard deduction be enhanced from 50,000 rupees to 1 lakh rupees. If the government is keen to continue with the old tax regime as well, then there are expectations of taxpayers. There's a limit of deduction available under Section 80C, which has been stagnant at 1.5 lakhs since 2014. That needs to be suitably enhanced. And similarly, the deduction available on interest on housing loan, that has been stagnant at 2 lakh rupees since several years. And there's a need to enhance that as well. So a lot of expectations as far as on the personal tax front, as far as individuals are concerned from this budget.
Okay, since a large part of our viewers are retail investors, investors in the market, Himanshu, I just wanted your thoughts there because there is some expectation of allowing mutual funds to offer pension and retirement products with the same tax benefits as a lot of tax saving schemes like an NPS, for example, right? On that front, what can we expect?
Yes, that's a fair expectation, I would say. I'm not so sure whether the government will be inclined to extend that benefit to mutual funds which invest in pension schemes. But overall, I would say as far as the capital gains tax regime is concerned, there are a lot of expectations on the taxpayers to rationalize or simplify the capital gains tax regime. Today, if you see, the regime has become very complex in nature. Depending on the category of assets, the holding period thereof, or the residential status of the taxpayer, you have differential capital gains tax rates which are applicable. And this has made it a very, very complex exercise. So there's an expectation of taxpayers that the capital gains tax regime should be simplified, it should be rationalized. And the way it could be rationalized is to say, to bifurcate all assets in two classes. One is what we call as financial assets, and the second is non-financial assets. As far as financial assets are concerned, let there be a more relaxed or liberalized tax regime applicable to them. For example, on long-term capital gains tax, let the rate be 10%. On short-term capital gains, let the rate be 15%. Whereas for all non-financial assets, let the long-term capital gains tax rate be 20% with indexation benefit, and let the short-term gain be subject to tax as per normal rates. So a lot of expectations on that front in terms of rationalization of the capital gains tax regime. Then the one other important aspect in the context of capital gains tax regime is in the context of buyback of shares by listed companies. Now today, when listed companies do a buyback of shares through the open market through stock exchange route, the shareholder does not know to whom he is selling the shares. So the shareholder ends up paying capital gains tax on that. The company doing the buyback also ends up paying buyback tax on that. And in that sense, the same transaction ends up in double taxation. And therefore, there's a need out there to eliminate the applicability of buyback tax when it comes to share buyback through this mechanism.
Gentlemen, good morning. We have Himanshu, good points there. We have Samir Kanabar, who's also now joining us on the program. He's partner tax regulatory services at EY. Samir, good morning. Good to have you on the program. You know, a lot of the viewers who are watching are I think I'm not sure I'm echoing their sentiments. Of course, more tax saving through higher exemption, etc., is absolutely welcome, right? But I think the big way in which a lot of people have created money and wealth over the last couple of years is through, of course, stocks. So that has been the single biggest driver for the wealth effect, and it's been humongous. And I think that is the reason why there is a lot of sensitivity around this on taxation and how you tax stocks. Samir, should we expect, as Himanshu just mentioned, rationalization is what he spoke about, 3 different buckets, etc. What are your thoughts here?
Yeah, so, and of course, this is more if I just joined in a bit late, so my apologies, but is more from personal tax or is it more from corporate or both?
Personal tax.
Personal taxation.
Personal. Okay. So, obviously, from personal tax, there are a lot of, I mean, if you look at pure economic data that has been released, there has been, nobody's now talking about that we need to expand the base. So we have quite a bit of taxpayers, which is around 6.5 crores. From 2 crores, we have moved to 6.5 crores. And hence now the discussions are that if we have more people paying taxes, and how do we sort of give back benefit to them? And that's where we are doing these discussions to say that, is there something that we can do more for the taxpayers and thereby increase the consumption story, leave more money in the hands of the people? Couple of things that come top of the mind is essentially, if you look at ESOPs, today the ESOPs are flavor of the day. And again, we are talking more from market perspective. A lot of companies are offering ESOPs. Now, today ESOPs are being taxed on the date of exercise. If this could be extended till the date of sale, obviously it would encourage a lot of people to sort of go for the ESOPs, because paying tax upfront without realizing any value becomes a big challenge. So this is something that I think government would be seriously looking at to bring taxation of ESOP, which is there, I think, today for startups, but not for all companies. So they should try to bring it at par from the date of realization. Second is, of course, if we can either increase the slab rates from 3 to 5, or can we increase standard deduction from 50 to say 125,000 rupees or all. That would also leave a lot of money in the hands of the people. Some of other important aspect is that, you know, the housing related changes which had come earlier, where people, you know, had to, where it is more than 10 crores, people had to sort of not been able to take full advantage of investing in a new house. Now, if this can be sort of allowed for first house or one house, and this 10 crore limit can be sort of fixated for a second or third or subsequent houses, but not for the first house. That will make a lot of difference in the hands of the taxpayers. And of course, then can you allow sort of, you know, housing loan enhancement from 2 to 3 lakhs or 4 lakhs, whatever it is appropriate, because today tax rates are quite high. Of course, we are looking at a lower tax regime, but we don't, a lower interest rate regime, but we don't know when the rates will reduce. So that is something that we would be looking at more focused, in a more focused manner. And of course, you know, today you can only offset 2 lakhs of your housing property loss against your other income. If that gap can be removed and you can be allowed to set off all your housing property related losses against all your other income, then this would sort of leave a lot of money in the hands of the people.
Okay, just one final question from my end, Samir, and this is Sonia here. You know, I think the bigger argument is, how does the government broaden the tax base, right? Get more people under the tax umbrella. And on that front, what do you think the government can do?
So, and again, as I just articulated the economic data, we have moved from 2 crores to 6.5 crores, right, taxpayers. And if you have broad numbers, if you look at, there may be, you know, how many taxpayers who have disposable income. It would be around, you know, 25, 30 odd crores, or between 25 to 35 odd crore people who would be in the tax net. And then, of course, if you leave out the daily wage earners or contract people, then you are around 20, 25 odd crores people, and out of that, say you're saying 6.5 crores people are paying tax. Obviously, yes, you would still want to expand the tax base, not that you would not want to. Having said that, at least today, we believe that we are in a not that kind of worse situation as we were when there were only 2 crore taxpayers. So we are still in a better situation. Having said that, if government still proposes to expand the tax base, obviously something that government want to then allow is to keep the slab rates undisturbed, but then enhance the sort of standard deduction and thereby allow people to still continue to come within the tax net because the slab rates are still lower, and then still continue to file return and thereby encourage more people. Again, one more data that is there, which has been put up by income tax authorities, is that people who were, say, below 5 lakhs, who were paying taxes has reduced from 50% to 33%. So many people have actually moved into a higher tax bracket from 5 lakhs and above. So what we can do to sort of encourage them to sort of, give more income in the disposable income in their hands is something that government should focus.
All right, gentlemen, thanks a lot for joining in. Let's see what the finance minister has in store for us in the next 1 week or so. We'll know. And post that, we'll invite both you gentlemen, Himanshu as well as Samir, to join us and give us your first take on that. For the time being, thanks a lot for joining in.